Okay, capital growth. To reiterate what we've said elsewhere, probably many times, your capital growth is the actual driver of this model. It's the capital growth in the asset value of the properties you own in your portfolio which enable you to create the funds for the deposits for the next property, so on and so on. In this model, nothing else is significant. The revenue you make from the properties is ignored in this model for reasons which are explained elsewhere. But we use a figure of 7.9% as our starting point because that is historically the UK-wide average rate of capital growth in house prices since accurate records began. Now 7.9% is an average and it's over a period of time. Now obviously the actual growth that you're being experienced can vary from specific area to specific area and from specific time to specific time. So when you're deciding to create a portfolio, it has to be, where is the best area for me to do this? It may or may not be close to home, in which case you're fairly lucky. It's more likely, particularly if you're living in an affluent part of the country and you have the money to invest, you might be quite a long way from the still developing parts of the country where, one, market values are lower, enabling you to get more properties for your money to start off with, and two, they haven't experienced the growth yet that you may have already experienced in your area. So for instance, London has seen years where capital growth has been well in excess of 15%. It's also seeing negative sometimes. So let's see, if you're an area where the current and short-term predicted capital growth is only 3%, see the effect that has on your property. So we're currently at 6 in the portfolio after 6 years at 34% return on capital investment. Capital growth down to 3%. We've only managed to achieve 3 properties in the portfolio and we've only made 8.25% return on the capital invested. That's not so hot, is it? You've taken a risk and you could probably be earning more in another investment. Conversely, there's areas where we are confidently forecasting in excess of 12% ongoing, particularly towards the northeast and northwest of the country, and plugging that in makes an enormous difference. At 12% average annual capital growth over the 6 years, you're looking at a portfolio of 9 properties worth almost £2 million and almost 75% average year-on-year return on your original seed capital. Cannot emphasise how much significance the average annual capital growth of the region you are investing in, how much importance it has in how large or small your success becomes. Obviously, again, if you are living in an area where for various reasons it is difficult to invest and you need to consider investing a long way from home, this is one of those situations where you really need to be finding yourself a reliable, competent, compliant, experienced deal sourcer who you can work with in order to get the biggest bang for your buck.